Hi, I'm Ryan Jinks, and welcome to another How Not to Invest video. I have this backdrop in a previous one where we talk about budgets, but it's too beautiful to turn the camera around. So today we're going to talk about what to do with your leftovers if you have leftovers, which is ideal when you're doing your budget. Now, you do have to save for some expenses that are not consistent, so you definitely want to have that set aside and planned out. Figure out whatever you're going to be spending roughly, divide by how long it is, and then that's how much you should be saving a month for that. But what happens if you have, let's say, $500 extra a month because you either have a side hustle or you're just good at not spending too much money? Can you start investing with $100? Yes, you can. Basically, that is the ideal place to start. It's called dollar cost averaging. If you put a little bit in over a long period of time, you're going to get far. And that is a good thing, because when stocks go down, you're freaking out. Your brain's just like, what did I get myself into? And what's great is when you are dollar cost averaging in, you want stocks to go down. You want them to be cheaper. Unless you're trying to live on the dividends, and even dividends, technically, if you have good stocks, keep coming in. If you're trying to live off of this portfolio of stocks, yeah, you don't want it to go down ideally. But if you're trying to buy a little bit every month, yeah, cheaper is better. And so it helps you psychologically, helps me psychologically, when, let's say Bitcoin just dropped 50%. Awesome. I wanted more of it. It felt like it got too expensive, around $50,000, even that $60,000 per Bitcoin range. And I wanted to put like another 10 grand in it. And I didn't want to, it was too expensive. And it dropped 50%. Yes, the ones I had already dropped 50%, but that's okay because I wanted to dollar cost average in more. And that is making this roller coaster of stocks going up and down, crypto going up and down, actually kind of fun. I don't know if fun's the right word, but palatable, manageable. I sleep like a baby at night. So you invest in things that you want to be in 10 years from now. I think Tesla's a great company. This is not financial advice. I think Tesla is a great company. I like them. I think they're awesome. So I would like to have them in 10 years from now. And I think they'll be higher than they are today. So you can figure this out for yourself. If you get paid weekly, you can throw $100 in and you'll never miss that money, is a theory where you invest first, spend your bills later. If you can't help but spend all the money in your bank account, I definitely think you should have a safety cushion. But if that's what works for you, is pay yourself first, pay your savings account before you pay your bills, because you'll figure it out. Sounds stressful, but if that works for you, great. I think it's nice to know that I have leftovers and then put that money into whatever I'm excited about. Now, if you only have $100 a month, you could just buy the S&P 500 or the Vanguard version of that. That follows the index fund. It's 500 of the amazing big stocks out there. And it's not likely to go to zero. I think we have bigger problems if the entire S&P 500 went to zero. So 10 or 20 years from now, it'll be higher. And that is a safe, easy investment. So if you open up a Schwab account or even use Webull or Robinhood, even though they're becoming less popular, or Fidelity, whoever you decide to use, you open an account, throw your first $100 in there, and buy VOO. If you don't know what to buy, the S&P 500 is just like shooting a shotgun out there. You'll do okay. Or you can get like Tesla and you could throw in, let's say you pick 3 amazing stocks. It's not very diversified, and you throw $33 in each one. Or you can do 100 this month for Tesla, 100 next month for whatever else you like. I'm not trying to give a bunch of stock tips on here, but the idea is that you just open an account, throw $100 in it, and see how much you can throw in every month. Now, it's nice to have a couple $1,000s either in your checking or savings to have as a cushion in case you make less money one month or you have bills that are a little bit higher. And then once, let's say $5,000 is your range, you can live a full month, if not more, on just that cushion. So you're actually spending that money and then filling it back up. And it's like pouring water into a bucket with a hole in the bottom. The hole is your expenses. And if you don't pour the water in fast enough, that's okay, because you have water in the bucket that can still go down for a while. If you have cash flow, then you technically have financial freedom. Yes, you have to still go to work every day, but hopefully you enjoy your work. If not, consider changing what you do. So let's say $5,000 or even $1,000 is your baseline. Never go below that. If you do, you want to make sure that it gets above that line before you take the extras and put it over in your Schwab or Fidelity account. Those are the two accounts I use mostly right now. And then put it in your favorite stock or the whole index fund. So that's a really, really basic thing. Now, I love cryptocurrency. And I know some people that love it so much, they put 100% of their money into it. I'm not in that camp. I think it's fantastic. But it's like 20, maybe 25% of my portfolio if it goes back up. Great. It doesn't need to be more than that. It's enough that if it goes to the moon, like everyone says, that'll be life-changing for me. But I don't need to throw 100% in and find out I'm wrong, because I've been wrong about stuff before. And that's okay if you're diversified. So if you like crypto, Bitcoin, I believe, is going to be around in 10 years. Ethereum, I also think is going to be around in 10 years. The other ones, we don't know. We don't know who's going to win the pecking order of crypto. But a lot of institutional investors like Bitcoin and technically Ethereum. So I definitely think that'll be around in 10 years, which means it'll be higher than it is today. It's only been around, I think, for 10 years. So you can open up a Gemini or Coinbase account, use the active trader or the pro account. It's like a setting inside of your options. Please use that. It looks like an F-15 fighter jet control panel, which is really frustrating how it has to look like that in order to get the cheaper fees. Way, way, way lower fees if you use that platform. But anyways, what I currently use is Gemini and Schwab for most of what I'm doing at this moment. And so I will put, when I have, let's say, $1,000 I want to put into stuff, I'll go over and buy a little bit of Ethereum, a little bit of Bitcoin, and I'll buy a little bit of Tesla or some of the ETFs that I want to buy, which is like cheap mutual funds. We'll go over that in a different video. And so I like 2 or 3 things that I'm really focused on over here, Bitcoin and Ethereum, and pop, 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 pop. And you can do that every month. $5, $100. Hopefully you can get $1,000. If you do that for 20 years, you're going to be doing okay versus not doing it at all. Because if you have, let's say you saved up 25 grand. Cool. That's amazing. But if you don't do anything with it, it's only going to be 25 grand. But if you put in these other things, it could be 50 grand in 10 years. The stock market on average makes 7 to 11%, depending what you're looking at. And it doesn't happen every year. It'll like shoot up and then be like level for a couple years and shoot up or down and up. But on average, 7-ish%. Bitcoin, technically 200+%, but I don't know how sustainable that is. But either way, it goes up over time. It just dropped 50%. Can you handle that? Yes, because you want to buy more of it. Because the next month you're going to have leftovers. You're going to go and deposit it in your Gemini account. And you're going to want to buy it cheaper, as cheap as you can, technically. So celebrate when things go down, even if you already own them. Keep buying in. Dollar cost average. Start with $5 if you can even open an account with that. Start somewhere. Even if you're 18 and you're just starting out, do a side hustle, babysit, Uber, anything to make an extra $100 a month. You do that when you're young. When you're 30, you're going to have so much more money than your friends. So what's fun about this channel is I am going to take a lot of the investment advice we see on YouTube and I'm going to use real dollars, my real money. I'm going to invest in the different stuff, some complicated stuff, some just like Dogecoin. I bought AMC the other day and doubled my money. It was only $300, but that's because I would never put more than that in such a risky thing. Don't do super, super, super high risky stuff unless you have $50 you just want to blow. It's like throwing $50 in a slot machine. Sure, it's fun, but you're not going to get rich doing that. Constant deposits into things that'll be around in 10 years is how you get rich. But there's so much advice on how to get rich that I'm going to basically shit test them all here on this channel. And I have quite a few investment accounts. I'm finding out what platform is the best to use for me as your average Joe Blow retailer. I am not a financial advisor. None of this is financial advice. If you can't tell, I'm sitting here in Yosemite just chilling, getting a sunburn. So I just really want to take the mystery out of budgets, out of investing, and tell you that you can do it with just a little bit of money. Because when you do actually get a better job, let's say you're 18 and you're squeaking by, you won't know what to do with the extra money if you haven't practiced investing and making those wise decisions. I made poor decisions. I was making decent money and I did not have a clue on to what to do with it. I felt like rental property was too high. I owned a duplex and I was like, well, sure hell don't want more tenants. And I literally had money just sitting there in the last 3 or 4 years while the stocks are going and just like, I missed out on so much because I wasn't practicing. Put a little bit in every month, dollar cost average in. And if it does shoot up to the moon and you want to buy a house later, cool. But otherwise, keep investing and eventually you become financially free, and we'll show you on this channel how to live off of those investments, off of passive income, which is what I'm more or less trying to do. And I'll show you what's working and what's not, and just not show you the good stuff. So make sure you subscribe so you can see all the shenanigans and me failing and succeeding. It'll be a shit show. Cheers.